What's up YouTube, it's Louis here, hope you're all well. We're looking at Quant today on the daily time frame. One insane day because the PPI yesterday was actually bullish. I did take a trade on Quant last night, that was a sell trade, that's separate, but I did take a buy trade on the Nasdaq just before that news data came in, and then of course it just hit take profit as the news release came out. The release was bullish, and so we should have just continued up yesterday. In fact, we went down, and that was because there was an announcement that there would be an announcement. And the actual announcement was absolute waffle, guys, about BITSTAMP or whatever. It was just an event, a coordinated FUD attack to push the markets down, and it affected most cryptos. And that's why we came down and retested the neckline. So it was an event to retest the neckline. Without the event, you can already see that you had a spinning top rejecting the 050 fib, which we were speaking about in yesterday's update. And as we thought in yesterday's update that we were going to come back down and test it, we did so. So this is why last night I did take a short, and I think the day before I took a trade, I made a YouTube short about it. So I'm going to try and make some more YouTube shorts for you guys on some trades that I do. So there will be more today. But yeah, right now you can see that currently we did, after rejecting the 050, form a bearish engulfing. So we got a lot of bearish momentum and actually closing below the 0382 fib. We are still holding above the neckline over here, 130. So that is completely fine. So still above it. However, let me just get rid of this moving average here. However, if we're losing this today with the daily candle close, we're going to come towards these moving averages. One level that we were struggling with a lot, if you remember, on the other quant chart, it's just going to get a little bit crazy because there's a big wick here on the other quant chart. Over here, can you see that? This is not the QCoin chart, this is not the regular chart, this is that special one where we've got a wick going down a bit lower. Anyways, we can see where the 200 EMA is, about $120. But the area I wanted to show you of interest is this 382. I had to come to this chart because the 382 is different to the other. So 125. So it's a psychological level. As you can see, there are multiple closes below here. You know, here we had a fake out where we closed under and respected it. Here again, respected it before breaking through. And now, yeah, well, you have actually confirmed it as support yesterday, the neckline, as we just discussed. However, again, with a lot of momentum. So, and this is a bearish engulfing, and we don't have any signs as of yet on the daily time frame. Remember, we need to wait for the daily candle close in 12 hours. We need to be shown signs of this being held as support to signal, okay, let's go back up to here and push through to meet this target. I'm going to show you guys another target. So from the lowest body back down to the neck, back up to the neckline, my apologies, and on the breakout you can see over here. Oh my gosh, sorry guys. Here we go. So we do have a target over here, $165, let's just say, tying in with the 618. So yeah, the 618, maybe a bit of a wick up to these wicks over here. And that's what we did actually see on the other chart over here. So on this special chart that we use with the lower wicks and the 382 at 125, which is where we want to actually be holding our support, we did currently find support at 127. That's enough because you have confirmed this as support. It's just we have not seen any signs that the momentum is dying. Let's see wicks going through with candle closes above this. That's going to be bullish signals that, yeah, this was just a retest of resistance. This is just part of an uptrend, and at the top of an uptrend you formed a bearish pattern or bearish candlestick to come down to form that higher low. We want to see that higher low. We want to see these EMAs held. You can come down again to about $120, but yeah, we want to be holding this 382, 125 as support. I'm going to draw the fibs from here to there, and you got, look, lining up nicely with that 382 fib, the 786. So we've pushed down and we've come into the golden pocket. So right here you're meant to get rejected, but yeah, luckily enough, I was talking about the double bottom and giving the target. We were saying back then, yeah, we might not meet the target because of these moving averages, because we come up into here coming back down, maybe just retesting its resistance to go lower. We were saying wait for closes below $100. No close below $100 equals no 83. Close below 100 equals 83. Close below 83 equals 50. Basically, none of that happens. We're not going down. We're not going down. We're going up. It's simple as that. Break the top, the resistance. We're going up. Retest this support. We've got a big ugly candle with a lot of momentum. So we need to kill off that momentum, basically, guys. So as we were meant to go down from here, but we created the reversal wave, we can't lose that going forward. So that's saying you can actually come down to 116. This is interesting because in that area right there, this, if as we zoom out, is a larger inverse head and shoulders on the weekly time frame. A lot of people are saying that they're seeing it on the monthly now as well. If we get rid of the drawings. So over here, inverse head and shoulders over here potentially. Now this has an upward slanting resistance, so I can actually draw it out for you guys. There you go. So you'd need monthly closes above 172 this month, next month 175, next month 78, 180. So yeah, once we're clearing about 190, that's the level we've been talking about, remember. Until then, let's go back to the daily now. Remember, we've been saying since November, it could be a risk that we head up to 190 and still get pushed lower. Oh, look at that, guys. So over here, as we're creeping up towards 786, there's that big brick wall of resistance. I'm going to get rid of it. We're just using the 786 fib. And so that is essentially saying that once, if we were to push through this golden pocket, again, we're coming down at the moment. We need to show signs that we're coming back up. Otherwise, it is just coming down. So we need to show signs that we are going to reverse. That could be on the neckline after today's daily candle close. We've retested it, but again, loads of momentum still. So we need to see that dying off. Maybe we do wick down to here. I'd love a close back above so we can continue up to our targets. But again, over here, we're going to start dumping. This is what I believe. Or if we don't, you just need to hold support above this, basically. So something like this. And then we go up because we want to flip this bear market level into a bull market level. We don't want something like this to happen where we fall back under everything, flip it back into resistance and continue lower. There's a risk of that, of course, and that's what we're waiting for. We're waiting for the signal whether we're going to push through to the 786 and continue lower, and it will be a fake out, or are we going to hold support and then continue up, but realizing that this is a key resistance that in the future we still need to tackle. This is a resistance I've actually been talking about since 2021, the end of 2021, so a good long time now, and we almost came up to it here. I was getting trolled because down as we were pushing down, I was calling for lower prices than this, and it completely reversed. Everyone was laughing because we reclaimed 150, but I was saying, haha, no, we need to get above the purple line, and we did not, so we continued down. And I was saying, we're going to go now lower than this to the target. And then what happened? Reversed, getting laughed at again. And I was just simply like, you're not above the red box and you need to get above that anyway. And then what? Eventually we went down. So it's the same over here. We need to get above that because if not, eventually we will get down. So you can still come up to that with the risk. So there's always going to be a risk as we're coming up that we can go lower, guys. It's going to be a long journey. But yeah, we're seeing, of course, good things in the immediate short term. But just realize it can easily get wiped away from us. So we need to be very cautious still. What I can even do, maybe even draw something over here. Something like that. Yeah, so support. I guess you can drag it in a bit. Yeah. Support, almost support, double bottom over here. And so look where we're respecting the medium range. Resistance, support, some support because he had a big spike up and then boom, fell under resistance, fake out, resistance. So we're still trapped under this medium line, and you can see that the range, okay, let's drag this down a little bit to the bodies over here. Resistance, support, and then held at support, big wick down to them. Oh no, this is wrong now. Playing around with it, but we're getting used to this range, so we need to get nice touches everywhere. Okay, yeah, so it looks like he got above, fell back under, got back above, held at support, fell under, got back above, then lost it. Resistance, support, held its support, went under resistance, resistance with fake outs, resistance, exact touch, resistance, and then push above, back underneath. So we need to reclaim that middle line. Again, that's about, yeah, just hold, again, let's just say hold the neckline and then we'll continue back up. But again, it's saying, look, oh, there's a top of the range. This is lining up depending on how long it's going to take to get up there towards that 786. So of course, if we're ever getting above that midpoint, again, could be that this is just coming down to get back above, or we are actually going lower. We need to just wait for the proof. But again, daily candle closes above here is good. Not yesterday's, another one, guys, another one. We want to see actually testing it, going below, and then coming back up for the daily candle close. And if it can reclaim that medium point and head to the range high, again, the next step is stay above that medium point. And that would be the bear market box. Can you see that? So from here, then let's go up and take it out. Understand, the risk is obviously something like this, where we lose the medium line and come back down. You'd still have this support, so giving you another chance, but with the risk, okay, maybe it is going to be a lower high, then lower low, or you can, of course, go up. We just need to be given the signals, but we can prepare in the meantime. So we are, but yeah, we're just waiting for the signals. Thank you guys so much for tuning in. Make sure we get this video to well over 100 likes. Share it so we can get to 5k subscribers as quick as we can. Check out the channel memberships if you want the videos out early, or if you just want to support the channel. If you want to get the one-to-one mentorship where I sit down with you over got a Discord or Zoom call, and yeah, we'll have multiple lessons till you get it. The course is included, the chat is included, where everyone's helping each other with trade ideas and so on. I will be in the chat as well, talking to everyone, giving my own personal thoughts, as well as more exclusive videos, more specific, yeah, to the people in the chat. And yeah, if you do not have time for the mentorship, you can just also get the course that does include the chat as well. Thank you guys so much for tuning in. If you want to take action, then hit the link underneath this video, head over to my Twitter, and we can get you started today. Cheers.